So Trendline is another popular strategy known in the Forex industry, and most traders use this strategy to make money in the Forex market till today. So in this video, I'll be showing you how Trendline works. So when it comes to Trendline, it's all about marking out where the market made a reverse. So I'll be showing you a few examples. So the market goes down, goes up, goes down, goes up. So at this point, when we see something like this is where we mark out our trend line. As you can see, it's called trend line. So this is where we mark out our trend line to give us these two touch. As you can see, this is the first touch and this is the second touch. First touch of the trend line, the second touch of the trend line. And as a trend line trader, what do? We mark out our trend line and wait for price to come and give us a third touch. So when the market gives us this third touch as a trendline trader, what do? This is where you go over to your smaller time frame. Remember, this is the bigger time frame. Remember, this is the 4-hour time frame or the 1-hour time frame. So when we see this in the bigger time frame, when we see this 1, 2, and then we draw our trend line, so wait for the market to give us a third touch of the trend line. And as a trendline trader, you go over to the smaller time frame from this point, which is the 15 minutes or the 5 minutes. And then this is where we enter a long position. As you can see, the market is really going up. So we should be thinking about buy, not selling. So stop loss, we do this in the smaller time frame. Over to the smaller time frame and take your position and take profit to the next swing high. This is your swing high. So after the third touch of the trend line, we expect the market to go up. So I'll take profits. So if you don't understand, I'll explain again. So the market goes down 1 and 2, we drew our trend line, and then we waited for the market to give us a third touch of this trend line we drew. We drew this trend line. So we waited for the third touch of the trend line, and when we had the third touch, we went over to the smaller time frame to take a long position, a buy trade. Long position, long is buy. So that's how we expected the market to move from this point to the upside. We're expecting our trend line. So sometimes the market is not as pretty as this. So sometimes you may not get something as beautiful as this. You may get something like the market goes down, goes up, goes down, and then to the upside. So sometimes we may have said the market has given a very big distance and we may not be sure that the market might come to our trend line. This is our trend line, giving us a first touch and a second touch. So we may doubt that the market will no more come back, but eventually the market may come back to our trend line. And this is where we go over to the smaller time frame to search for buy opportunities to enter a long position. What we do in the smaller time frame is we wait for a market shift, because this is a downtrend. This is the bigger time frame. 4-hour, 1 hour is a big time frame. So the market is moving down, and when we go over to the smaller time frame, we look for a market shift. And then when we see a market shift in the smaller time frame, this is where we enter a long position. This is where we enter for a buy. So what do we expect from this point? We're expecting the market to move to our take profits, just like that. So this is how trendline works, and we also have trendline breakouts. When it comes to trendline, we also have breakout, because the market may not just keep moving up and keep going up. There's going to be a point where the market is going to start going down, and when that happens, the market will break the trend line. The market may break your trend line. So this is what I'm talking about. Market goes down, goes up, goes down, goes up, and then this is where we draw our trend line, because we've seen two touch. And we wait for the market to come to a trend line again, waiting for a third touch, but instead, what do we get? The market moved and broke our trend line. And as a trendline trader, we call this breakout. We call this trendline breakout, because the market just broke our trend line. This means we're no more looking for buy in this trade. We are looking for sells. We'll be selling this market. So as a trend line trader, at this point, you wait for the market to come to your trend line to retest the trend line. This is where you enter for a sell position. Why are we selling? Because the market is about to go down. How do we know the market is about to go down? Because the market broke our trend line. So another thing you should have in mind is that the market doesn't always retest your trend line. The market may not retest the trend line. The market may just come to this point and start moving down. Why? Because this is a resistance zone. From this point, this is a resistance zone. So the market broke the trend line. Not only the trend line, the market broke your support, which is now resistant. If you've watched my recent video, you understand what I'm talking about support and resistance. So as a trendline trader, you can also use support and resistance for analyzing the market. So the market may not retest your trend line. The market may just come over to the resistance and then start pushing down. I don't know if you understand. I'll repeat again. It's not a compulsory deal that the market must retest the trend line. Sometimes, majority times, the market retests the resistance zone and then start moving down. So, as a trend line trader, sometimes you shouldn't be surprised that the market didn't retest your trend line. But we should also look out for resistance zone where the market may retest, and this is where we go over to the smaller time frame to enter a sell position, to enter a short position. So let's say the market didn't come to our resistance zone because this is a trend line topic. So let's say the market retested our trend line, and this is where we enter for a sell position. This is where we enter for a short position. This is where we enter for a short position. We go over to the smaller time frame, wait for a market shift, and we enter a short position. Why are we selling? Because the market is about to go down. How do we know the market is about to go down? Because the market broke our trend line and retested it. So we went over to the smaller time frame to wait for a market shift, and then this is why we're selling. So what do we expect from this point? We expect the market to move down to take profits. So when it comes to trend line, this is what we should know. We also have trend line breakouts. So this doesn't mean that as a trend line trader you shouldn't trade the breakout. You should trade both the following of the trend or the breakouts of the trend. It's okay to trade both. So if you don't understand, I'll explain again. The market came reversed, came again, reversed. We marked out our trend line, and then the market broke our trend line. So we're no more looking for buys, we're looking for sells. So we waited for the market to retest our trend line. And like I told you before, the market may not retest your trend line. It may just retest a resistance zone here, but this is not resistance zone we're talking about. We're talking about trend line. So let's assume that the market retested our trend line. So this is where we go over to the smaller time frame to search for a market shift and then enter a position, then wait for the market to keep going down. So this is how trend line works. And remember, this is the bigger time frame, 1 hour, 4 hour. This is the bigger time frame. So this is for the uptrend. So these are for the uptrend, and I'll be showing you another example, but this time we'll be using a downtrend. So the market goes like this, then like this, and then this is where we go. This is where we see, okay, first touch, second touch. This is where we mark out our trend line. We wait for the market to come and give us a third touch of the trend line. And when we see this third touch of the trend line, this is where we go over to the smaller time frame at this point to wait for the market shift. And when we see a market shift in the smaller time frame, we enter a short position. That's sell. Why are we selling? Because the market is going down. So we sell, take profit to the downside. And what do we expect from this point? We expect the market to move down. down to our take profits. So like I told you before, sometimes the market may not be as beautiful as this. Sometimes the market may do something like this, goes down and then to the downside. And this is where we mark out our trend line, giving us these two touch, first touch and the second touch. So we'll wait for the market to come to a trend line, come back to our trend line, and this point we go over to the smaller time frame to search for a market shift at this point here. Go over to the smaller time frame to wait for a market shift. And when we see a market shift in the smaller time frame, this is where we enter a short position. So short position, stop loss above any highs, and then take profit to the downside. So this is how it worked. The market gave us the first touch, second touch, we drew a trend line and then waited for the market to come to a trend line. And then when the market eventually came to a trend line, we went into the smaller time frame to search for a market shift. And when we got a market shift, this is where we entered a short position and then we waited for the market to go into or take profits. This is what we expect the market to do, to move down from this point. So as for the breakout, this is how the breakout may look like. The market goes like this. Our trend line across both reversal points. The market came here, as you can see, the market came here, reversed to the downside, came to this point again, reversed to the downside. So we marked out our trend line. So we waited for the market to come to a trend line so we could sell again. But this time the market just gave us a big surprise by going up, breaking our trend line. And this is where we say, okay, we're no more looking for a sell position, we're looking for buy. Why are we buying? Because the market is about to go up. How do we know the market is about to go up? Because the market broke our trend line. This is a trend line breakout. The market broke our trend to the upside. This means this market is about to shift. So, as a trend line trader, what do? We wait for the market to come to our trend line, retest our trend line before we could enter a buy position. But like I've always told you before, the market may not come to the trend line in particular. The market may just retest this support zone here and then start moving up. So we should also expect that as a trend line trader. And if you don't know about support and resistance, I'll recommend you go to my YouTube channel and check out the video about support and resistance so you know about this too. So the market may just retest your support around here and start moving up. But let's say for today, the market retested our trend line. This is where we go over to the smaller time frame at this point and we search for a market shift. And when we see a market shift, this is where we enter a long position after we see a market shift in the smaller time frame. And what do we expect the market to do after retesting our trend line? We expect the market to keep going up to our take profit, up all the way. So this is how trend line works, and this is called trend line breakouts. The market came reversed, came again reversed, we drew our trend line, and then the market broke the trend line and then we tested the trend line. This is where we entered a long position. Why did we enter a long position? Because the market is about to go up. So this is how trend line works. It's all about drawing a line across to reversal points, and this is the breakout too. I also explained this. So right now I will be showing you how this trend line works in the real market. I'll be showing you those breakouts and all of that. So right now we are on GBP USD. As you can see, it's written right here, GBP USD. So this is GBP USD and we are in the 4-hour time frame. And like I told you before, the 4-hour time frame is a big time frame. This is where we look at where the markets are going, the direction of the market. And as a trend line trader, this is where we draw our trend line, giving us those first touch and second touch and all of that. So I'll be giving you example from, let's start from here. And as you can see, the market made first touch, second touch, so many touches around here. So let's just take it for example. So as you can see right here, the market came to this point. As you can see right here, the market came to this point, reversed, and then came again, reversed, and then this is where we drew our trend line and waited for the third touch. And the third touch came, but so all we have to do is just adjust our trend line, and then this is our third touch of the trend line. So this is where we enter a sell position. This is where we go over to the smaller time frame here. This is where we go over to the smaller time frame here to look for a market shift. And when we see a market shift, and then we can enter a short position because the market is going down. So short position at this point, stop loss, and then take profit to. So this is where we wait, and then as you can see, the market went straight to our take profit. So let me just so like I showed you before, this first touch goes down, second touch goes down, and then third touch. This will go over to the smaller time frame to look for a market shift. And after we've seen a market shift, we enter a sell position, and then we wait for price to go down, smashing our take profits. So, and if you don't know what a market shift is, a market shift is something like, okay, this point. Okay, I will. So take a look at this point here. From here to here, this point, this up move. So this up move is this, something like this. In the smaller time frame, I'm drawing out the smaller time frame, how the smaller time frame looks like. So that's this point. So this up down up down up down is this point here, is this particular place. So the market shift I'm talking about is something like this. The market break below the recent low. This is a market shift. The market just broke this low. Now we have a market shift, and then we'll wait for the market to retest and then keep going down. So this is the smaller time frame, and this is your market shift right here. It's a point where the market changed direction. There she is, market shift, MS, market shift. So this up move right here, from this point to this point, this up move is this place. This up move is here, and then this is where we wait for the market to break below the last low. And then after we've seen our market shift, we entered a short position, and then the market went our way. So let's take another example, but this time we should use another currency pair, so it doesn't look like the trend line only works for GBP USD. The trend line works for all currency pairs. So this is XAU USD, which is gold versus the US dollar. As you can see, this is XAU USD, which is gold versus US dollar, and this is the 4-hour time frame. So welcome to XAU USD, and this is the 4-hour time frame. So at this point, if you take a look, we had our first touch of the trend line, first touch, second touch, and then the trend line broke. So as you can see, the market gave us this first touch, second touch, and then the market broke our trend line. And as a trend line trader, what do we do when the market breaks our trend line? This means the market is about to change direction. So the market broke our trend line, and we waited for the market to retest the trend line. So the market really retested the trend line at this point, and okay, then this is where we enter a short position. Take profit to the downside. As you can see, at the end of the day, although it took a lot of time, but at the end of the day, the market goes down to our take profits. And this trend line worked out. We drew our trend line. The market gave us first touch, second touch, broke the trend line, waited for a retest to the trend line, and the market retested the trend line. We should go over to the 1 hour time frame so we can see this very clearly. All right, so this is the 1 hour time frame, and this is it. As you can see, the market gave us a first touch of the trend line, second touch of the trend line, and then a breakout. And after breaking out, the market retested the trend line. This is where we entered for sell position, and then we waited, although the market made a whole lot of consolidation. But at the end of the day, the market goes down to our take profits. So I'll give you one more example. Let's go over to the same XAU USD. Let's search for another. All right, look at this one here. So if you notice from this point, the market gave us a first touch here, second touch, and the market didn't retest our trend line. As you can see, the market gave us first touch, second touch, broke the trend line, but didn't retest the trend line. But instead, this is a resistance zone which the market broke and then retested the resistance zone and then start moving down. So as a trendline trader, you should also expect this to happen. And I'll say this, take it from me, I've been trading for 2 years and I've been seeing this multiple times. The market doesn't always retest your trend line. The market may just come to a resistance zone and then start moving down. And as you can see, that's what happened here. Gave us this first touch and then goes up, second touch, and then the market broke the trend line, and then the market retested this resistance zone instead of the trend line. The market just came to this resistance zone and start moving down. So as a trend line trader, you should expect this to happen. You should really expect this to happen. So what do we do when the market comes to our resistance zone? This is where we go over to the smaller time frame, and then when we see a market shift, we enter a short position, stop loss around here, and then we send our take profit to the downside, maybe around any point. So we do this, we take our positions in the smaller time frame. This is the 1 hour time frame. You don't put this position here. You go over to the smaller time frame to put your position, to wait for market shift. I already show you how the market shift look like. So if you don't understand, I will explain one more time. So the market came down, gave us a first touch, goes up and came down again, gave us a second touch, and then this is where we marked out our trend line, and then we waited for the market to give us a third touch, but instead the market broke the trend line. And after the break of the trend line, this means we're no more looking for buys, we're looking for sells. And then the market retested the resistance zone instead of the trend line. This is where we entered a sell position, and then we waited, and that's when the market goes down to a take profit, smashing our take profits. So that's all for Trendline. This is how Trendline works. It works for all currency pairs: GBP USD, XAU USD, BTC USD, even Euro USD. So it works for all currency pairs, and this is how it works. So it's all about marking out a point where the market made a reversal, and then wait for the market to come to your trend line, and then you enter a long position or short position. That's if you're a downtrend, and a long position if you're an uptrend. But if the market gives you a breakout and then you wait for the retest of the trend line, or maybe the market may not retest the trend line, may retest the support or resistance zone around there, and you wait for your market shift, and when you see a market shift, you enter your position, either buy or sell. So this is how Trendline works, and in my next video I'll be talking about patterns. And that's all for this video, and I'll see you in the next one. Peace out.